information is easy to get. We live in a digital world. Few clicks, maybe 1 or 2 phone calls, will understand what we're invested in.
And do you find that, Muneeb, that people who in your space you mentioned earlier want control, want to be able to be invested typically in crypto, are they doing it for pure control, ethical purposes? Or do you find people who go, okay, my money's better invested, it's just better return, or they go, I don't trust the stock market? What's the general vibe?
Purely for returns. Yeah. It's not for ethics. I mean, these are people who have educated themselves to know that, if your fund is returning 7 to 8%, it's below par. Like if you sort of factor in inflation and debasement, unless you're earning 10 plus, you're actually going backwards.
Hi everyone, Assalamu alaikum. This is Ridwan Hanan here. We are casting again episode 2 from the Faith, Money, Finance podcast. We did have a bit of a break, but we are back in action for a full year of episodes with a lot of guests and some people that we think are going to be really impactful to the space. As usual, we've got our 2 co-hosts, Muneeb and Afiq. Thank you for being here. I hope you guys are doing well in Ramadan. It's a bit of a long day for us all, but hopefully we'll get there.
Inshallah. Only a couple of hours to iftar, so we'll be all right.
It's about 3 hours, man. Be accurate. So last time we spoke about our backgrounds. I think we learned a little bit about all of us. There's probably a little bit more to tell, but we did have a call to action at the end of the podcast, which was superannuation, something that myself and Afiq deal with quite regularly. Muneeb, I think you deal with quite a lot as well, given your trading floor activities. But I think it's a really good way to be able to start the new episode of this year, to be able to get back into what's something which is overlooked. And that reason is because it's far away. So with superannuation, obviously people know how it works, what it is meant to do for them, but the actual operative elements, what you're meant to look for in a fund, what number you're meant to get to towards the end, and essentially why it's really important for you, I think is overlooked. And sometimes it's because of it's a tomorrow problem or a far away problem. So I actually wanted to touch on that and whether or not we could go into a little bit of detail, potentially from, trading, alternate stocks, alternate investments such as crypto. And then Afiq, from your point of view, would be really common practice to talk to everyone about their affairs in regards to super. You're doing their overall wealth profile, what it looks like. And I can have a little bit of a chat with you guys about maybe self-managed super funds. And I think there's going to be an announcement by Afiq at the end with regards to a new superannuation product which is launched. So it's not a preamble, it's not a sell, but it's something you're definitely doing in the background, I think, for last year or so.
That's something we've been working on for at least 3 years.
Okay, last 3 years. Okay, great.
And it's finally launched. And the timing could not be better because it's Ramadan. So we didn't time this. This was not meant to be. It just so happened. That's all.
And don't take his tired look as a lack of
excitement.
So we'll try to get into it. So I had a couple of questions for both of you. Now, Muneeb, your background is in finance, accounting, bit of audit, as you mentioned last episode, and you know obviously about superannuation, but you probably have a lot of friends who are outside that world. What's the overall consensus that you find, maybe amongst the community, maybe amongst your friends, whatever it might be, about superannuation generally? What's the attitude towards it?
I think it's vastly neglected, right? Like, as you said, a lot of people think about it as a tomorrow problem. The people who do want to take charge of their own finances, they'll generally do a bit of research, but I think very few people actually are active in managing their super balances, right? Like, I would say there's only a minority of people who sort of go to the extent of setting up a self-managed super fund and taking control of their finances. So I would say generally it's a neglected area in the community, and that's probably due to maybe a lack of education, right? Or awareness of what options they have.
And do you find that people in your circle kind of care? Like, do people go, okay, hey, look, my super fund should be performing better, or I'd love it if it covered off, I knew more about it. What's the general engagement? Because I guess from my point of view, when I see clients, when I see people, there's kind of a lens that's always put on it, like people are coming in for a reason or talking to us for a reason. But when you get into more general environment, it's sometimes harder to discern, right? So do you ever find anyone's, is it topic like come across? Is people have any interest in it?
Definitely. Like, I mean, in the circle that I'm in, like a lot of it is people who are interested in trading or finance and they want to take ownership of their finances. So they're very interested in super, but it's like there's a minority of people, right? But they will actually go to the extent of researching. I find most of them do end up, setting up a self-managed super fund. I mean, in terms of my current employment and what we do, we service like a very large number of super funds, right? I think we've probably got, I would say, close to 100 super funds on our book. Sorry, not super funds, self-managed super funds,
Sure.
right? And just within the crypto niche, like it's actually become a thing. We're sort of moving further down the path of regulation where we might get to a stage where like an industry type superannuation fund will be able to hold crypto within that sort of broader setup. So, people who are, let's say, ahead of the curve, forward thinking, they've sort of been on it for at least 24 months, I'm going to say, and the early adopters even before that, right? Because there's no impediment to holding crypto within your portfolio.
Yeah, excellent. And do you find that people who are, maybe friends not in the space are thinking about taking control to invest in things like, crypto, Bitcoin, or are they looking at more traditional assets, shares, property, or is it a mix of everything?
With inflation and the price of assets these days, like, for someone who's like 2021, they find it very hard to sort of foresee them purchasing property or buying like a big asset. And if you sort of look at the returns that are generated in the stock market, like, of course, if you're with someone who knows what they're doing, they can be meaningful, right? But if you sort of look at the average sort of superannuation return, maybe it's like 8-9%, if that. And it's very hard to sort of outperform that, if you're not going to be active in the way you sort of manage your funds. And I think, honestly, the majority of people don't care.
Yeah.
Right? That's my takeaway.
Yeah.
The ones who do, they'll actually do something about it and they'll sort of explore options. But like, if you're going to ask me, the majority of people, they don't care.
Yeah. And Afiq, do you find that similar in either people who have come to you with an opening question about what's happening with my super, or potentially you're dealing with a client who then doesn't really ask you about super, but you ask the question, hey, what's happening in your super fund? Do you find that there's a lack of care, lack of understanding, or maybe just a too busy basket?
I think it's 50-50. When people see me as a financial planner, they usually ask me, I'm not really sure what's happening in my super. I think it could perform better. Is there something we can do about it? Or I will have to prompt them. Sometimes they don't even think about it.
What about our community? Are they?
Oh, our community, they are completely lost when it comes to superannuation. And my theory is this: their parents, because super, when their parents were around, was a relatively new thing by that time. And I think because first, second generation migrants, they probably think, I'll come to Australia, make heaps of money, and I'll probably retire back at the country I migrated from. But now I think our generation's not like that. We see Australia as home. So our goal now, so the first thing I normally ask is, what's your goal? Where do you want to retire? 9 times out of 10, people our age, I want to retire in Australia. So this is when now they think, okay, cool, I need to really think about my super. Whereas back in our parents, they just didn't care. They want getting cash on the side, etc. Whereas now it's, okay, I'm happy to get paid X amount, but I still want super. Now I think I can see a bit more awareness in our community as opposed to even 5-10 years ago. Now it's, okay, what is my super doing? What is it invested in? Right now, the fact that right now there are certain companies we're boycotting, is your super invested in that? I think right now, even in our community, it's a huge thing right now.
So interesting. I just wrote down here, ethical, circled it.
Yeah.
And I wrote immigration, right?
Yeah.
Because topically at the moment, today is the 25th of February, right? There's been a lot of challenges for the community with regards to conversations politically, what's been happening in the boycotts, and the result of the boycotts, all these other different things. So if you then get people who are not really concerned about super, how do you make them ethically minded about this super? And is it important? And why is it important to be ethically minded about super in relation to boycotts?
Because, okay, the way I see it, the way I talk to my clients about it, and I always say, super is for you. It's not for you right now, it's for future you. How you pay your super and how your super performs will ultimately help you. Sometimes I do get rebuttal, I think, I don't know if I want to live that long. Who cares? So my answer to that is, well, if it's not going to go to you, it's going to go to your family. And if it's not going to go to your family, because let's say if you're a hermit, for example, it's going to go to the community. So the first thing is, it is for you, it's for future you. So what do we do then? Let's maximize future you. Because even though the pension age is at 67, you can sort of semi-retire by 60. There's something called transition to retirement, which you can start doing at 60. Essentially, as Aussies, and we all Aussies here, we're living a much longer life compared to the rest of the world. And if you can start transitioning to retirement at 60 and you have a decent balance, you can start living off that and do things that you like at 60. When we put that focus on the client themselves, then we talk about, okay, your super is performing X amount, it's invested in this. Are you happy with this? When you retire, are you going to be happy with yourself that you've earned X amount per year only? Or you've invested in these companies which...
What is X amount per year? Like, as in, what should a super fund balance, whereas 120,000 in a standard retail fund produce? And then an ethical fund, whatever that looks like in existence now, what does that produce? And then should we be sacrificing returns for ethical investment? What I mean by that is sometimes, especially in our community, there's like a tax. Like, so if you want to use a Sharia-compliant or ethical investment, it might be performing worse, or if it's a product, it might cost more. Do we have to have that compromise? So what does it look like? So people are listening, you go, okay, great. I know nothing about my super. I'm going to rip out my phone and then I jump on whatever, any retail fund that they might have. It's done 9%. Great. But then is it important to look down what they're investing in, and or is there ethical options which can produce the same or better for them to consider? Because if you're getting same, then it's really about ethical versus return, right? And if you then want to prioritize your ethical priority, do you have to sacrifice your return?
I genuinely believe you don't have to. Yeah. In Australia, there's something called, there are ethical supers that already exist, and normal industry super. But, even with these ethical supers that do exist, they do something called greenwashing. They buy a bunch of credits, etc., bunch of carbon credits, and suddenly it's all ethical and green. However, the industry standard and the ethical super in Australia are pretty much on par. In terms of return, they're very, very similar now, right? Especially when there's all these credits that you can buy. So it's very similar. I think in our community, it's whether it's halal or not. Because something can be ethical, it doesn't mean it's halal. So the way I see it is, for an Islamic product or Sharia-compliant product to exist, it can't only be halal. It has to be tayyib, which is wholesome, right? And what do I mean by that is, if you're invested in something that's Islamic or something that's pushing towards Islamic or geared towards Islamic products, it has to be performed at the same standard or better. If it doesn't, why are you compromising returns just on ethics? So my view is this: if it's Islamic, compare it to your industry products. Is it better, or is it worse, or is it the same? If it's worse, that's going to affect future you, right? But if it's better, of course, it's going to be better. But if it's the same, then go for the halal or Sharia compliant product. Do we have products like that right now that exist? Yes and no. Yes, because it was only to a select few people who knew about it. No, because I believe, and from what I've seen, the halal products or the Sharia compliant products that did exist wasn't up to industry standard. If anything, a lot of these Sharia compliant options haven't performed as well as we thought it should. So,
and we've obviously had a couple of products which have gone pear-shaped.
Yeah.
Right? So they've gone completely. So that's the point of my question. I'm probably hammering it home is that the ethical option for me shouldn't have to be an unstructured, less secure option. It should be something that is there, it's ethical, and in your words, halal, which allows it to be at least the same or better than an existing product, right? And for me, if that offering is not there, we need it in the community. And if it's only one, we need more, because, you might have more is better if we're trying to do good for the community. So back to my question is that if you're ethically minded and you want a good superannuation return, is there current options which allow for that?
Yes, there are.
Okay.
And that's something that we're launching soon.
Yeah. Called
halalsuperannuation.com.au.
Okay, nice.
So what we do, it's very simple, very easy to remember. halalsuperannuation.com.au, launching very soon. Inshallah, by the time this is out, we should have the link ready and you can join up. Essentially what we're doing is we're providing a superannuation platform where we can take any industry super or any other super, whether it's normal industry super or SMSF, and it'll be transparent. You get to see what you invested in. The results have been, alhamdulillah, very good. We've been running the product for the last 3 years, and I think we're finally comfortable enough. We've got the infrastructure to take on the wider community now.
Okay, excellent. That's cool. That's good. We'll come back to that. So, what should you be looking for in your super fund?
The obvious one is the returns. That's number one. You want to make sure your average Australian super, your average industry Australian super, according to Morningstar, on a balanced portfolio is returning between 7 to 8% per annum. So you want it to be around that or a bit higher than that. The next thing you want to look at is what are they invested in? Because I'm not too worried about fees to a certain extent, because if you're paying 1% or 1.5%, which is the average super, and you're getting 8-9%, that's fair enough. You know, I'm not too worried about that, because that is what the average super charges. If it's more than 1.5 to 2%, you might want to have a look. Unless the returns reflect the amount that you're paying, I'd probably have a check with that. But I think the most important part is the returns and what they're invested in. There are companies that you invest in which are actively engaged in unethical practices, which, you know, I mean, like I mentioned before, it has to be halal and tayyib.
Yeah.
And part of the tayyib series is start to have that part of your investment.
Do you find that normal super funds give you that transparency to be able to determine that?
No.
Like a retail fund or whatever?
No. I mean, just look at your super fund right now. Just look at what you invest in. Unless certain super funds will allow you to choose what risk profile you want to be in, whether you want to be balanced, conservative, or growth, but a lot will just put you into a fund which is
feeder fund into something else.
Yeah, it's a feeder fund that just coincides with your birthday, and then they just invest it for you, and the only number you see is your returns. And they will treat you like a number until you're close to retirement. Let's say 55, you might get a ring. Hey, but the financial planner that works for this fund, the industry super fund that you invested with, let's do some financial planning. And no transparency at all. If you're happy with that, that's fine. But I think, you know, as Muslims, we should have a bit more transparency, a bit more knowledge, I guess, in where our money is going, because information is easy to get. We live in a digital world. Few clicks, maybe 1 or 2 phone calls, will understand what we're invested in.
And do you find that, Muneeb, that people who in your space you mentioned earlier want control, want to be able to be invested typically in crypto, are they doing it for pure control, ethical purposes? Or do you find people who go, okay, you know, my money's better invested, it's just better return? Or they go, I don't trust the stock market. What's the general vibe?
Purely for returns. Yeah. It's not for ethics. I mean, these are people who have educated themselves to know that, you know, if your fund is returning 7 to 8%, it's below par. Like if you sort of factor in inflation and debasement, you know, unless you're earning 10 plus, you're actually going backwards. Yeah. So these are people who've done the math and said, okay, well, you know, I would love to have ethical options. If you sort of look at it year on year and adopt like a, you know, long time horizon, which everybody should when they're considering super. If you sort of think about like university endowment funds and why they've done so well is because they have such a long time horizon, right? So anybody who's 20 should have a very different portfolio than someone who's 55, right?
That's very interesting, because your average market long-term return is about 10+%, whereas that's not the case for superannuation, which is crazy, right? So
what I'm trying to extract here is that you've got people who have researched, who have technical knowledge. They're going, okay, great, I'm taking control of my super. You've got other people who have been in your fund for 3+ years who are getting returns. I don't know what they are, but I'm assuming they're above the average. They're also taking avid interest in it. We see a lot of people who set up self-managed super funds, investing in property, for example. So it seems that the people who want better returns are taking control. That's kind of what I can glean out of this information, right? And I think that maybe makes sense, because the retail super funds, I think they don't do too bad a job, to be honest with you. They're getting 10 to 11%, but they rely on people not necessarily being concerned about it. Like, hey, we're doing good, we're advertising, we're doing everything we need to do. You're getting your papers in the mail, your email now in the mail, and you might have a couple of 100,000, looks pretty cool. And then you will maybe have a trajectory saying you're earmarked to retire on 657,000 or whatever it might be. I think it makes people feel good, especially the people who haven't got the time, acumen, potentially the interest in it as well. So I think if we want people to be more empowered with their money for ethical purposes is what we're talking about here, it seems like they need to take some level of control, right? So whether it's super funds, whether it's retail funds they can invest in, whether it's self-managed super funds. So tell me, potentially both of you, why you think superannuation is so important for our community and generally for people to consider. Because obviously super doesn't exist everywhere, right? So it kind of exists in certain country frameworks. It doesn't exist in a lot of places, or if it does exist, it's really poorly governed, right? So why is superannuation so important? Why should people pay a lot of attention to it?
Initially, super was created just so we don't rely on the government, especially when it comes to retirement and pension. And I think the way the government does indexation for the pension is so low right now that you can't rely on the government. We're at that point in life, especially in Australia, that yes, maybe 20, 30 years ago, if I don't have any super, I'll just rely on the government. But with the cost of living rising and, just everything rising, if you don't look after your super, I don't know how you're going to survive, because suddenly your spending habits will change when you're older. You'll have a lot more free time. And even if you don't need as much money, you can use that super money to contribute more towards the community as well. So,
do you know what the mandated retirement amount is? Like what people should be having in terms of disposable income per year in retirement? I think there's a stat. Right? So as of 24-25, over 40% of Australian retirees rely on the government pension, which is kind of scary, and the main source of income, with an average retirement occurring at 57 to 64. So I think that's wrong because it's just gleaning information. But ASFA, which is some sort of standard, they say a single home owner should be, so the annual income, this is what I was looking for. The annual income from smart money from government is $53,000 to $75,000 per year, right? So this stat has been going around for quite a while, right? So when we were doing talks and superannuation, we always use these numbers, but actually I looked it up recently. Back then, I think a conservative lifestyle income, so for a couple, was about 70,000 for a couple, right? We live in Sydney. Man, by the time we retire, the tolls are going to be $70,000 a year, right? So what is it? What do you think, in your professional experience, is an amount that people in Australia, potentially over in our community, should aim to have in their super when they retire? Because that might tell us why it's so important to look after it.
You want an honest answer?
I only want the honest answer. It's Ramadan.
People need at least $1.5 to $2 million.
Yeah, wow.
Absolutely minimum.
Wow.
Because if you're drawing down, let's say $2 million, and you're drawing
as a couple, yeah,
right? You're drawing down at 5% on that, right? So that becomes $100,000 a year.
This is assuming home ownership, right?
Yeah, this is assuming home ownership.
Yeah, right. That's a big number.
Yeah. So, which is not impossible to get, by the way, especially if you purchase properties, etc. Anyway, let's go back to so you need about $100,000, which means you need at least $2 million
on a 5% drawdown.
On a 5% drawdown.
Yeah. So for those who don't understand, so basically you'll have an average way in which people in the finance and the advisory space look at 5% being the average type of income that you can draw in an up and down market. Is that fair? So people look at, weighted average returns of particular things, cap rates on particular assets change, but 5% is it. So if you've got $1 million, you should be able to draw down $50,000 without touching the capital, essentially. So what I guess you're saying is that at the time of retirement, so say 67, for some people earlier, some people slightly later, but average 67, you'll need around about $1.5 to $2 million in today's money, not in 20, 30 years money.
Yeah, so 20, 30
right?
years,
might jump.
Take inflation into account, probably need $3 to $4 million.
Yeah, right. So that's a lot of money. So that kind of tells me that the people that you're dealing with see that, and they go, okay, well, yes, it's a better return, but I need that better return because I've got a lifestyle to match. So I think what people and I see in the space is people say super is what it is. It's a future Ridwan, future Afiq, future Muneeb problem. And when you get there, you go, okay, great. How do I now backward calculate my lifestyle to match this number? Whereas if you were prospective and you say, okay, great, I need a number which is going to match my then lifestyle. So things I tell my clients is you might have, for example, travel. A lot of people work all their lives and they want to travel, various places. For us, it could be Hajj, Umrah, could be back to, anywhere else that they're thinking about going. It could be helping kids with marriage. Cost of marriage and getting married is not cheap anymore. You've got homes that they need to purchase, for example. Education is becoming more expensive, for example. And the big one, which people don't often look at, is health, right? So our healthcare system, Medicare system is great, takes care of a lot of people. But if you have elective surgery, things you need to get done, things you don't want to wait for, that's really an expensive process. And not every pension or not every retiree, I should say, has private health cover which will support that, right? And then you've got things just like living, council, all these different things add up, right? So it's one of those things where if you don't have a lifestyle requirement, then you will have to pare back your lifestyle to match your capital, right? Which I think is kind of scary,
And have you known anyone who, when they retire, that's it, I'm going to stop going out, I'm going to stop spending money? No, if anything gets worse, right? Or we'll spend more money. So I think that $1.5 to $2 million is probably on the lower end. So this is why the super is very important in my eyes. And the ability to actually, right now, there's no excuse right now. Maybe you can say, 10, 15 years ago, I didn't know there's a way for me to improve the returns, someone to talk to. Right now, the resources are there. The people that help you, like us, we're here, right? And, I wanted halal, I wanted Sharia-compliant. Well, now there's an option where it's not only Sharia-compliant and halal and ethical, it's transparent. And, obviously with the caveat, not past results aren't indicative of future results. It has outperformed many industry super funds in the last 3 to 4 years. So the options are out there. All we need to do now is just take action. So are we going to think of it as another future Ridwan, future Muneeb, future Afiq problem? Or is it, okay, I'm going to go to halalsuper.com.au, have a quick chat, have a look. What's my super doing right now? Do I turn it into an SMSF? Do I want a bit more, do I want different assets? Do I want different asset exposures? Do I want crypto exposure? Because you can do all that right now. And all you need is a good team to work with it to do that. You don't need to be a crypto genius. You don't need to be an accountant. You don't need to be a financial planner. You just need to have a good team. So the onus is on you to take action, I guess.
If you take this one step further, right, like what would be the optimal portfolio structure for someone who's got 120, 150K sitting in super and is on Halal Super or anywhere else, or just wants to take more ownership? What do you think the optimal structure is?
If they're with an industry super, I would ask them to look at the returns and look at the fees and what they're invested in. If they're not happy, then there are other options where, the returns could be a bit better, fees could be cheaper.
So say if I've got 250K in super, according to you, what would be the optimal portfolio structure or portfolio mix?
I would more than likely go down the self-managed super fund route. And then from that, probably 60-70% put into property, leverage property. And then the rest, I would split that between some direct equities, obviously Sharia-compliant, and possibly some crypto as well. That'll just be the liquid portion of it. And then with the property, that'll continue to grow and, reassess every couple of years. Because if the cash portion is growing, then possibly even get another property. So that's a way to turbocharge the figure from 250 to 2 mil in 10 to 15 years, essentially. Because
it's sustainable. Like, how much risk are you taking on in that process?
I would argue it's the same risk as if you have it in the industry super. And the reason why is because in the industry super, they do invest in unlisted products, which you don't know of. So I'll give you an example. An industry super might own a stadium or a portion of a stadium, right? is owning that stadium, or is your super owning that stadium the same risk as their super owning a residential property? It's probably the same, right? And then they'll diversify the equities, etc., which you can do within the SMSF anyway. So I don't think you're taking on any extra risk. There's a bit of leverage involved in terms of borrowing some money in order to buy the property, but that's as risky as the Australian real estate market, which, as you know, is one of the most stable markets in the world. So in terms of risk, I don't think you're taking on any more risk, but at least the risk that if you think you are taking on, it's way more proportional to the results that you're going to get, rather than just having standard industry super.
But it also sounds like a lot of work, right? Like you can just be passive about it and have your fund sitting with the industry super fund, or if you're going to be active and invest in property and do all these things, like it does seem like you need to put a lot of time into it. Like, are there ways for someone to get help along every step of the way?
Yeah, absolutely. And one thing I can say this is, the more active you are, the better the returns, rather than you being passive, right? Because being passive means, especially if you're an investor in the industry super, it's set and forget. And if you set and forget, things won't happen. But if you take an active involvement, and all you need to do is just see your accountant and your financial advisor once a year. And unless you're really pedantic, you might see them twice a year. But once a year is enough to put everything in place, set everything up, and then a quick 1 hour catch up, 2 hour catch up yearly with the advisor and accountant is more than enough to get everything running.
Okay, look, I think that's true. Probably to put a practical lens on it, that's an overall strategy. There are elements. If you're buying a property, if you're doing this, you're signing documents, you're providing notes at the end of the year to the accountant, to the financial planner, there is more of a lift. But to be fair, I think after a year or two, that lift sort of dissipates, comes in flow, it's pretty easy. And generally speaking, we see clients who take control as at the end of it going, it's not that hard, and it gives them so much more optionality, right? And I think that's something that is undersold in terms of what a self-managed super fund or even taking control through a wrap platform can do. You do have control, right? And most people are anti-authoritarian. And so that's not a plug to be that way. But if you want control, then at least you kind of have a set of people, a set of that you can go to. Now, that's not to say that you go and try putting into risky investments. We've seen plenty of investments go pear-shaped, especially inside the superannuation product world. It should be something that you understand, identify, and clearly, if you don't have an accountant, financial planner, a finance person, somebody who you get information from, do so. Find it. Doesn't have to be us. Doesn't have to be anyone that we know or promote. Just anyone. So I think most people will go through. Even if I think about that stat, if it's true, if 40% of people are relying on the pension is not much, unfortunately, right? It's like, yeah, I don't know. It's I can't remember, to be honest with you, but it's certainly not enough to get by.
And I mean, look, I've got clients who are on the who are on the pension now because they came a bit too late. It's $1,400 a fortnight.
Yeah, no.
It's
so in terms of optionality for clients to be able to engage in potentially a super fund, a wrap platform, what I kind of see is that people who do actually get that control, they kind of have themselves to hold account, and so they do a little bit better. And one thing that we see quite often now, it's no secret, in any of the eastern seaboards, major cities, it's really difficult to get property. This is definitely not to say that everyone should have a property and self-managed super fund, but a lot of people do come in going, hey, I may not have the option to get it personally, but I've got $200,000, $300,000, $400,000, $500,000 in super. I'd like to maybe get into the market so that they can benefit in retirement. And obviously we can go through some tax elements about retirement, but at the very least, if they don't actually, or they can't live in it, they've got exposure to their market. So at least they can catch any gains that come out of that market, as opposed to looking at it, reading the paper. The paper tells you every day that cities more and more unaffordable. Melbourne's more and more difficult to invest in because of taxes and whatnot. But a lot of people are just saying, don't worry about any of that. I'll mobilize some of my super, maybe not all, get into a property. And at the worst case, their kids have something to be able to rely on, not in terms of the property, but the gains. They could sell it and they could do whatever they need to do. So I think with regards to optionality, And just remember, like you can actually even buy overseas property, right? So we've got some clients who are purchasing properties in overseas locations, right? Especially for our community, you've got people who are buying properties in the Gulf countries. You know, obviously Saudi Arabia's just opened up in Medina and Makkah to buy properties. Something certainly that, you know, needs probably a little bit of nuance, but you could probably potentially buy properties with your super fund. You can't use it, but you can rent it because obviously we know, you know, what it looks like to be invested in those markets. So I think if we take it one step forward again, one question I have here is that what happens in the future when we do come to retire? It's probably too late to fix anything. So if you don't do it now, and getting to that end point is, you know, really, I think, going to be a challenge. And why I bring that up is that a lot of people blame baby boomers for property prices. A lot of people say that baby boomers have had the best growth in the stock market, for example. So maybe 2 years ago, I attended a conference, I should say, where a statistician came and he talked about the silver tsunami. Do you know what that is?
No.
So the silver tsunami is basically people who have hair like Afiq's, but they don't dye it. They're all gray. And they're in a position where they've got property, they've got shares, they've got investments, they've got all these different things. People our parents' age, baby boomers, they've got all the wealth, like all the wealth is concentrated with them, according to most, you know, statistical analysis. So I think $4 trillion-ish is stuck in super and their assets and all these. Actually, it's probably more because it's $3 trillion in super alone, just in the retail space. So it's probably north of $4 trillion is stuck with the silver tsunami crew. So the silver tsunami or silver fox is that all that money is going to transfer to the people who survived them. So their children, children's children, maybe in their wills, it jumps a generation and goes to the grandchildren for whatever it is. When you look at superannuation as a legacy product, as a legacy sort of type offering, do you find that clients should be focused on themselves or what's to come, their generation to come? Like, should we be looking at it as an intergenerational tool to be able to transfer and pass down money? And even you said earlier, to the community potentially, if you don't have any actual people to leave it to. What's your view on that?
Look, the future Ridwan, future Afiq should use super as a tool in terms of how we want to spend and how we want to live, how we want to retire. I mean, how we want to live our retirement lives. That's what we should use. However, if we have a decent amount of super and we're drawing down on it, let's say at 5%, and we've invested in a way we're getting 6-7% return on something that's super safe, chances are by the time that we pass away, we will still have that existing capital. Not only that, it might even be more than we were initially retired with. So the reason why I say that is because super doesn't end when you die. Super then becomes something that you can pass on to your kids or your community, and you can even will it in a way that, okay, I'm going to give my kids, let's say 50% because I've looked after them really well, and then 50% to causes which I really believe in, and obviously because we believe in a world in the hereafter that can do those causes as well. So it's not a 2D thing. It's not my super, my retirement, and I'm done. It should be my super, my retirement, comfortably, yeah, the children and community. And this is something that has been deployed by many other communities in Australia that have been here for, you know, many generations. And I think right now we're just catching up to it. I think we've just established a couple endowment funds, etc. as well. And this is something that your super can be invested in, and you can actually put your money where in causes that you actually believe in. So no, it's not a one-sided investment. It's multifaceted, multi-pronged, and something that can be done and can actually do real significant change to the community. And you know, I don't know if you guys have heard, this is one thing that my mom used to say: you can't bring your money to the grave, which is true, right? But you can't spend it all as well. So what do? Think about your future generations. So that's what I think.
Muneeb, any thoughts?
Look, I agree with what he said, but I think for the vast majority of people, it's like an issue of them and it's an issue of having a comfortable retirement.
Yeah.
And for a lot of people, it's difficult right now, right? Like I know a lot of people who are my age who are helping their parents because let's say they neglected their super.
Yeah.
So it's well and good to sort of think about, what's going to happen after I pass away. But I think for the majority of people, if they want to sort of, have a comfortable life, live with dignity, not be so reliant on other people, I think you got to think about yourself first and foremost. After that, you can think about, how can I help other people?
Yeah, fair enough.
Yeah. You mentioned a good point there. The fact that you've got friends, and I'm sure I do too, that are helping their parents because they didn't look after their super. So what we don't want to do is be a repeat of the generation before us, right? Just something to think about.
Yeah, look, I think it's also important that people, back to the silver tsunami thing, if, I leave my parents a long life, if you do come into money, then you have to deploy it well. And a strategy can be to push money into superannuation, right? Even though it feels like a future you problem, you can actually push it into there. So if you were getting, sale of a house in, the western suburb of Sydney or the northern suburb of Sydney or down south, Melbourne, wherever it is, and you sell it because you don't want to keep that property, for example, or your parents' principal place of property, and you can sell it within 2 years and you don't pay any tax on it. If you're getting $1 million amongst two siblings or $2 million amongst two siblings, it's not an insignificant amount of wealth. So you need to be able to then look at what you're going to do with that so you don't waste it, so you then don't repeat that problem where you're doing it. Or it could be the case where you have, for example, a surviving parent whom you need to then take care of, right? So what does that all look like? Do you set up a trust? Do you set up, do you push money into their super? What does it all look like, right? So I think a lot of the conversations that we have in the professional space, they ultimately are real life human conversations. Even though they feel like they're structured in walls in an office, they're actually, stories of real people who want to do it. I've got a story where a client, he's like a doctor or something like that, and works at a university, well paid, only has about $170,000 in super, right? And had some family members who were unwell, and then was really scrambling to work out how much can he take, what part is non-concessional, so there's no additional tax implication. And in the end, I was like, how much are you looking to withdraw? Because I thought it was like, $75,000, $100,000. He goes, I need about $8,000, right? And then I was like it really sort of hit me in the head. I was like, that's something that people at all walks of life, at all levels, highly educated, or people who are working different types of jobs, that reality in retirement is real. Like it really matters, right? And so I think that potentially from a community point of view, we've had some products which try and get there, maybe haven't fully got to mark, but full respects to, starting that conversation. But we do need more products which integrate with super, integrate with our own financial management day to day, which allow us to invest and do those things. So we're not in that, position. And
I think one thing that people can understand there are huge tax advantages for having super or putting more money into super.
So all awesome points that we've talked about here. I'll probably have a reverse call to action because we had the call to action last time. So if anyone hasn't checked their super, do it. If you don't know what your partner's super is or your spouse's super, there may be things that you can catch up with your advisors about, whether you need help from us or them. Just ask these questions, sit down, take the time. I think a lot of the time we see that it's in the way too busy basket. Super, I'm 40, I am 40, but 20 years, 25 years feels like forever, but it's not. We know that time flies, right? Especially as you get older. In a position where you're going to be not doing anything over the break, if you're not going to be doing anything on, Easter holidays, or if the holidays are when you didn't do anything productive. I know it sucks. I know it hurts and you don't know the password and all the other stuff. The reverse call to action is, if you haven't checked your super as of the last episode, open your super, open your spouse's super, work out what you have combined. If that number is 100, 200, 500, a million, it doesn't matter what it is. Get advice on how to deploy it effectively, regardless of what the number. And I'm assuming that both of you have seen with client profiles both ways, whether investing in crypto, in property, in shares, in stocks, whatever it might be, that smaller balances have definitely, with a bit of attention and care, gone to really sizable and meaningful balances, right? And if you feel like you're behind, I think get the advice to determine whether you are actually behind or not, right? So some people who have 250 might feel, okay, that's great, that's a good amount. But if you've been working for the last 15 years and your salary's been 130,000, should be more than 250, right? Yeah. And the reverse is true. If you've been working a job where you're making 100, or, you're younger in age. And so you feel like, I think you had a case the other day where a client was working for like the last 8 years on about 80 grand and the last 2 years on 100 and something thousand. And the total balance was only like 80 or 70 or something like that.
70,000.
So like a logic test to that to say, where should my super be? I think that's useful, right? So if you haven't done that, definitely do that. Number 2 is that work out amongst yourselves what you need as a retirement amount. Like, do it as a mini budget now. Yes, if you haven't got school fees because your kids are growing up, but you might have other things, right? I think maybe pencil that down, bring it in, talk about it. It is a little bit finicky, a little bit, what's the word? It's a little bit self-intrusive. Like you have to then face yourself in the mirror. Most people get their letters and just throw it in the bin because they don't want to see what's in there, right? But if you open it and you read it and you go, okay, I know what I'm up for, right? That's probably the best advice. But yeah, maybe wrap up with you two just to be able to tell us what your next steps would be if you were in a position where you hadn't looked at your super for a long time. What would you do? Where would you go? And what are you looking for in a super for yourselves?
I would, if I looked at my super, I wasn't happy today, I'd go to my advisor and have a chat with him. Or if you need an advisor or you need another option, go to halalsuperannuation.com.au.
Plug.
Plug, baby. Keep that in. Yeah, so I would definitely go see my advisor or my accountant, someone I trust, and work out a plan. And keep Halal Super in your plans. That's it.
On a serious note, I think it is getting that advice to make sure that where your super is invested, if ethical is important to you, find an ethical fund. If performance is important to you, find a performing fund. Like there's no issue either way, right?
Sure.
Muneeb?
Yeah, I think you have to educate yourself and know what your balance is, right? So at a base level, you need to know what your balance is. If you need some help with the numbers, spreadsheets, or you've got questions in terms of who to ask, I think the three of us would be happy to help, right? So if you want to reach out to us in the comments or send us an email, we can definitely point you in the right direction.
Maybe that's a good idea, actually. I didn't even think about that. Maybe you can develop a spreadsheet and send it out and have it, people who click and all that other stuff, I don't know how it works, so they can get it, right? And they can utilize that for like a recording purposes. I actually had a good one the client sent a couple of days just to list their assets, balances, superannuation. It's pretty clear.
Oh, like a fact find.
Yeah, kind of, but like more like a spreadsheet that they can continue update and whatnot.
Yeah, well, we've got one of those already.
Yeah,
Well, clients.
you can do that.
Yeah, and send it over. Cool. Easy. Thanks, guys.
Everyone, call to action is in. If you haven't looked at your super, look at it. If you haven't got in touch with anyone, get in touch with your accountant, advisor, anyone who you trust, and make sure that you're doing something, because doing nothing means nothing will change. And I think that the next episode will probably have a guest. They'll be talking about some topical factors around our community, money, and how it all works and operates. Maybe a couple of touchy subjects. We'll see how it goes. But until then, Assalamu alaikum and enjoy.
Thank you very much, everyone.
Thank you.